Hello there. Index funds are a very efficient way to invest. They allow ordinary investors to gain exposure to large numbers of securities at very low cost. Passively managed funds have grown hugely in popularity in recent years, so much so in fact that some say we may be heading for an indexing bubble. So is this something investors should be worried about? Ben Johnson, Director of Passive Funds Research at Morningstar, says not.
If you look at the growth of passive investing, it's clear why these concerns have been raised, because passive investing, index funds, exchange traded funds have been growing at a pace that has far outstripped the growth, which has actually in some cases been attrition of traditional actively managed funds. Now that said, these are by definition very low activity managed funds. So the real concern should be, who is doing price setting at the margin? Does it continue to be well-informed, well-equipped active managers, or is it just passive funds that are blindly buying securities that are setting out to track the index? These low activity, low turnover funds are actually doing a very tiny fraction of the actual trading in securities markets, which is where actual price discovery is taking place, where prices are being set.
Passive funds are still far less popular than active funds, but that's changing fast. The ratings agency Moody's has predicted that passive will overtake active by 2024 and possibly as early as 2021. But even then, Ben Johnson says passive will still have plenty of room to grow without having to worry about any adverse effects on the markets.
So I would argue that passives can grow a fairly long way. They have a long runway from where they stand today before you might see any real meaningful effect on price discovery, on capital formation, on the underlying securities prices. I think these fears with respect to passives' effect on the overall market are quite overblown. I think they're being fanned by, frankly, those who are threatened by them, whose territory is being encroached upon, which is high cost, high turnover active managers.
That's it. Thank you to Ben Johnson from Morningstar and to you for watching. Until next time, goodbye.